Welcome back to The Explainer. Today, we're jumping right into week 30 of the GoldMining Swissie USDCHF recovery series. Now, if you're expecting a rapid-fire, get-rich-quick financial highlight reel, you might want to look elsewhere. Instead, we're going to slow things down. We're taking a calm, almost cinematic look at the realities of systematic account recovery, documenting exactly how the data unfolds week by week. We're tracking a really crucial stage in this real account's long-term journey. The ultimate destination here is 10,000 cents. And since this is a cent account, all the raw figures generated by the system are tracked in cents, meaning 10,000 cents is exactly $100. So when you see a balance of 2,042, that's actually $20.42. But to keep things simple and avoid any mental math fatigue, we're just going to refer to the raw numbers exactly as the system reports them. This whole series is grounded entirely in transparent data and disciplined rebuilding. The mantra is pretty clear. Discipline today, freedom tomorrow. Focus, patience, and progression. We're documenting every single stage here, whether the progress is fast, slow, successful, or just downright difficult. Zooming right into the micro view for this specific week, the systematic strategy successfully carved out a steady 3.04% gain on the account balance. In the world of automated algorithmic execution, consistency over a defined period is really what we're measuring. And this week provided exactly that kind of steady, upward progression you absolutely want to see during a rebuild phase. Diving into the official MetaTrader 5 report, that measured performance translated to a realized profit of exactly $60.33 over the trading period, pushing the balance up to $2,042.48. Notice what's completely missing here? Manual interference. There are no sudden deposits, no random withdrawals. It's just pure systematic execution doing its job quietly in the background. What's truly impressive, though, is the realized drawdown. We're looking at a remarkably low 0.589% for the week. While that green growth line steps up nice and calmly, the red drawdown line just stays virtually flat. It proves a highly collected approach to the market this week, keeping risk incredibly tight while safely capturing those margins. To see exactly how that builds, let's look at the granular execution. We can verify exactly 4 completed USDCHF trades during this session. In algorithmic trading, less is very often more. The system wasn't out there over-trading or forcing entries. It just patiently waited for specific parameters to be met, which resulted in just these 4 distinct market interactions. And the execution clearly highlights the strategy's core logic. Basically, 3 profitable trades easily outweighed one single controlled loss of 13.02. Look at how that one loss is just immediately absorbed and eclipsed by a 48.30 profit on the very same day, which was then followed by 2 more measured wins. It perfectly illustrates the systematic approach to recovery. It's entirely devoid of emotional decision-making. No revenge trading after a loss, just cold, hard logic. This visual breakdown perfectly captures that unemotional execution. A gross profit of $69.92 sits right alongside a minor $13.02 gross loss. That results in a highly favorable profit factor of 537 for the week. Essentially, the system made over 5 times more than it lost. It's just a beautiful representation of letting winners run their programmed course while strictly, ruthlessly capping the downside. Tracking these measured trend participations step by step on the M15 chart, the precise nature of the algorithmic entries and exits really becomes clear. But it's important to remember this steady upward climb didn't happen in a vacuum. Throughout the week, subtle shifts in Federal Reserve interest rate expectations and U.S. Treasury yields were influencing global risk sentiment. The algorithms simply identified how those macroeconomic factors created a tradable trend, and it capitalized on it. Now, to truly appreciate the value of this calm week, we have to zoom out to the macro view and acknowledge the long-term reality of this account. While week 30 was peaceful, the total lifetime growth actually sits at negative 14.57%. We can't just look at a single good week and declare victory, right? True documentaries require looking at the whole, unvarnished truth. And the contrast is pretty stark. The serene stability of week 30 is this gentle upward staircase. But looking at the broader picture, you see the chaotic history that necessitated this current recovery mode in the first place. Deep volatility and steep drawdown spikes earlier in the year. It's a very clear reminder of why strict risk management is now the ultimate, non-negotiable priority. Radical transparency means looking directly at this lifetime history, which reveals that this account weathered a massive 65.44% historical drawdown. Let's be honest, most systems would have completely blown the account at that level, but it survived, bruised, heavily drawn down, sure, but mathematically alive to fight and recover another day. Which brings us to a crucial element of transparency that a lot of highlight reels try to sweep under the rug: the ongoing floating exposure. We're talking about the trades that are currently open and running in the negative. Because generating a realized profit for the week, that's really only half the story. There is a massive, undeniable gap here between the realized balance and the actual open equity. While the balance line has been steadily marching upward, cementing those weekly realized gains, the open equity line remains significantly suppressed right below it. To put that into perspective, let's look at the raw numbers. The balance sits at 2,042.48, but the equity is down at 875.26. This gap transparently demonstrates that while the account is generating steady realized gains, it's simultaneously managing a heavy floating drawdown from past open positions. The algorithmic engine is essentially trying to out-earn its own historical baggage. There is a major silver lining in the risk management, though. The long-term deposit load reveals that current market exposure is being managed much more conservatively now. Notice those massive spikes in the past that reached over 3%? Well, during week 30, the maximum deposit load was strictly capped at just 1.28%. The system has deliberately lowered its active footprint to facilitate a slow, safe rebuild without over-leveraging. As this whole documentation shows, true trading recovery is absolutely not a get-rich-quick scheme. It is a methodical, sometimes grueling process that demands immense patience, strict risk management, and realistic expectations. You simply don't undo a 65% drawdown overnight. You do it exactly like week 30, one small, 3% step at a time, protecting the downside at all costs. As this real account continues its relentless, methodical climb toward that ultimate 10,000-cent goal, generating modest wins while carrying heavy historical exposure, it leaves us with a fascinating question. Will this systematic discipline eventually force the equity line to catch up to the balance? The next stages of this recovery journey are going to be critical to watch. Thank you so much for joining me for this explainer, and as always, keep learning.